Let's get straight to our next guest, Glen Wood, Head of Sales Global at Mitsubishi UFJ Morgan Stanley Securities, who's joining us now live from Tokyo. Glen, good to have you with us today. Thank you so much for joining us. We have had a lot of analysts on the program over the last couple of weeks telling us overweight Japan, overweight US is the way to go, even though they're warning at the same time, in the same breath, that we may see some sort of a pullback coming through in the US market. Is this a buying opportunity for Japan equities?
Hi, Oriel. It's good to be back. Absolutely. As Kaori highlighted earlier, Japan's up 50% year to date. We have $7 trillion US dollars coming into equities this year. Japan getting a good portion of that. But Abenomics, Kurodanomics, has just begun. This unprecedented quantitative easing in Japan, along with what the third arrow will hold. A lot of the details yet to be seen, however. Japan is on a new trajectory, and there's a huge opportunity here to invest.
Okay, where do you see the opportunities coming through, Glen, in terms of the stock plays on the market? Because clearly a lot of traders out there are very much focused on Abenomics.
That's right, and so we need to see some of the internals of this Abenomics plan, and we need to see the strategy going forward. However, even some of the large macro events that we've got coming in the pipeline for Japan, whether it's casinos now coming to Japan, or Olympics, or TPP, or the new NISA plan, the individual savings account plan, which will encourage individuals to put money into equities. There's a lot of reasons here to expect the Japanese equity market to do better. In terms of individual stocks and sectors, I think as long as we have this weaker yen, which I expect to continue, the auto sector and the auto parts sector is definitely set to outperform. I think a lot of owner-managed companies, like Nidec is one that I've mentioned here before, that have really kind of charismatic leadership, like Nagamori Shacho. I think those are great investments here.
You know, Glen, everybody's been talking about the need for that third arrow and putting, raising salary and wages in Japan to empower the consumer. And earlier on in the year, everybody said, to see further gains in dollar yen, euro yen, we need to see that third arrow. But I would say that, that's happened without the third arrow. So is it really that necessary? Or in a roundabout way, is this currency weakness providing an artificial crutch to delay that process?
Well, that's one way of saying it, Adam. I wouldn't necessarily call it an artificial crutch. I would say, again, that we need to see the internals of that plan. In the 1990s, we saw Hashimoto, Prime Minister, come out with a plan, and in the end, nothing was really executed. Following that, we had the 2005 plan that came out, and that wasn't really executed. So now we've got Abenomics and Kurodanomics. This time, Kurodanomics does represent a huge change, a huge shift in what we've had in the past in terms of the Bank of Japan being directly involved with quantitative easing. I think there's more of a sense of crisis this time. I think there's more a sense that, yes, Japan needs to change, and I think change will come. In terms of what's actually going to happen and some things that have concerned me so far, there does seem to be a contradiction in terms of tax policy, for example. If I wanted growth in an economy, I think the first thing I would do is lower taxes. And most of what we've heard so far from the Abe government is raising taxes. And that certainly is a concern.
Okay, Glen, you've listed 4 stocks here. Which one is your favorite beneficiary of Kurodanomics and Abenomics?
I'm not sure if there's one that fits in both categories, but certainly autos across the board are going to benefit largely from a weaker yen, but also from deregulation. They're also talking about increasing wages and returning more to shareholders, which again is very, very welcome from the global investment community. We need to see Japanese companies be more shareholder friendly and focusing more on returning profits to shareholders.
Okay, all right, Glen, always a pleasure to chat. Thanks for joining us here on the program.
Thanks very much, Oriel. Thanks, Adam. Good to see you again.